FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we continue our journey through trading with a purpose, following our 4 pairs, we've already talked about pretty much all the pairs except for pound USD. So let's review pound USD and let's take a look at what happened last week. Now, last week, this is 15-minute chart on the right is essentially last week. And then over here on the left-hand side is going to be the 1 hour chart or the 150-minute chart. Essentially, at the beginning of the week, last week, we were still coming off a reset. We were still looking for buys. Now, a couple things I want to mention before we even get started is the fact that last week we basically were creating a peak formation high. All right. With that being said, on Monday, let's get right into it. On Monday here, if we take a look at price action on Monday, a couple things I want you guys to notice about what's happening is on Monday, coming out of the Asian range, we had an aggressive move coming out. Okay, a huge aggressive move pushing price down. From looking at it in a perspective of you're coming from a reset, because this right here would have been Monday, right? This area here on the 1 hour chart. We're still looking for buys, right? Because we're coming off a reset. So our bias is still to look for buys. So with price action coming down really aggressive like this, okay, there would have been only one option in my mind to think about, and that essentially would have been a type 1. So because we're only looking for type 1s, obviously based on this aggressive move here, initially you would have thought that there would have been a potential for a good type 1 here, as it's creating potentially a second leg. Okay, potentially seeing this pattern essentially, which is, which would have been something like that, right? And you would have seen, let's say, this here, these two candles as railroad tracks. Okay, now if we go ahead and we measure out these candles here, I mean, they're only like 4 pips a piece, right? So they're very small candles. So a couple things that I need you guys to understand is that if you're going to take candles like this as railroad tracks, the ones that I have found to give the most success when it comes to railroad tracks are candles that are above 7, 8 or above on the size of the candle. Okay, anything under 5 candles is honestly not going to be a lot. Now, granted, if you took this trade as a second leg railroad track, and I mean, as long as it met all your rules, then that's perfectly fine, right? It's just, it would have ended up as a loss, obviously, which is fine. But I mean, as long as you followed the rules, that's the important part. As long as you follow the rules for your plan, that's all that matters. Okay, and so let's just say that your trade setup essentially could have been something like this, right? For a 2-to-1 risk reward ratio. Okay, something like that. That could have been your trade. Okay, you're taking this, let's say, as a railroad track, and then the next candle gives you the pullback. Well, I mean, depending obviously on where you have the entry, could be, down here you could have gotten, and down here you could have gotten up here. Typically, let's just put it where most people would have probably taken the trade there, and so the trade setup would have looked something like this. Essentially, you would have been looking just to get into just a 50 EMA. Essentially, you're not really trying to do too much, but that at least gives you a 2-to-1 risk to reward ratio. Okay, now if we start counting here, you get into the trade here, you get 1, 2, 3, 4, 5, 6 candles on this red candle here. You got to ask yourself, am I in any kind of significant profit? And if you're not in significant profit, then do you take yourself out of the trade, or do you let it go? There's going to be conservative traders and there's going to be aggressive traders. So conservative traders typically like to follow the rules, and then they just go ahead and get out after 6 candles. If you're an aggressive trader, you're probably going to let this go and let it either take you out or take you into take profit. Okay. But regardless, if you get out here at the 6 candle rule, then essentially you're getting out with about 5 pips. So really it's almost like a break-even trade, which is fine. And you're out, right? If you're an aggressive trader, let's say, and you just let it go, then you're going to be looking for, possibly pretty close to getting a 2-to-1 here with this move up here. But essentially you can see that it gives you basically a 1.5 to 1 risk to reward ratio. But my point is on this. Here's my point about all this entire thing. For me, I need to have bigger candles for railroad tracks. So if you want to add something specific to your trading plan, you could be like, hey, railroad tracks, if I'm going to take them, they need to be more than 6 pips for the railroad track. Okay. And if it's not that, then I just won't take it. That's just me personally. I would that's the way that I would trade. And so that would have essentially avoided me getting into a trade like this, because this essentially for me had everything that typically I would look for in a type 1. The only thing that I don't like about it is the fact that this, what we would normally call a railroad track here, is just very small. So to me, it's not very convincing of a move. Let's say if both candles were like this one here, you had a blue candle like this and a red candle before it like this. For me, that's a unbelievably great railroad track, right? So I would have definitely taken that trade on the next candle, see if there's a pullback or not. But you just have to have discretion essentially of what it is that you want and what it is that you like to trade. So if you're looking for buys, that would have been what you would initially be looking for as a setup on Monday. All right, now going into the US session, a couple of things could have happened here depending on what time were you looking at the charts in the US session. The reason I say that is because beautiful things about trading the US session is the fact that you can trade in either direction. You really don't have a directional bias per se in the US session, because you can trade both ways. Now, if you were early on from the get-go looking at the US session, you possibly could have seen this as a possible continuation trade like this, if you're looking at it from that perspective. Because if you come into the charts and you're looking at this right here coming into the US session, you're like, hey, this right here looks pretty good to a continuation trade. You're rejecting from the 200, the 50. The trade setup would have been something like this, where you're essentially looking for, again, a 2-to-1 risk to reward ratio on it. And yeah, so something like that. The next candle, does it give you a pullback? No. And then obviously could have been your continuation trade that you're looking for. And essentially that would have given you a 2-to-1 trade right there. If you were a trader that, let's say, opened up the charts a little bit later, right, you would have been looking at something like this on the charts, right? And so what does that look like to a lot of traders? A lot of traders might see this as almost like a multi-session type 1 setup, right? That's very possible. Now, a couple things to note about this is the fact that, does this right here, what you think is a second leg, does the blue candle cover 75% of the red candle? Well, the red candle is about 17.5 pips or so, give or take. The blue candle is about 12 pips. So does it cover 75%. So 75% of the candle would have been right around 13.1 pip or something like that. So this is only 12.1 pips. So the answer to that is no. So because it doesn't cover 75% of that red candle, to me, this would not have qualified for me as a star pattern. Okay. With that being said, we keep going with this, and essentially now you can start to see where we essentially look like we're getting a reversal here with a second leg being created. Okay, so it would have been something like that. Now you got to ask yourself is a couple things. You're kind of looking at the same scenario here, where if you're calling this a first leg and then this potentially a second leg, you have to wait for a close. If you don't get a railroad track or star pattern here, you'd have to wait for a close of the 13, which is here. And by that time, if you look, where are you when it comes to the 50, right? The 50 is literally right there. So this is not really a viable trade for you to take, because the risk to reward is just not there, right? You not only do you have the 50, but you also have the 200. So both of those EMAs are typically going to act, in this case, as a form of resistance. And so you're very likely not going to get a lot of play there. And so you can see what happens here, where price just reverses or whatnots. Okay, so that's Monday. All right, so that's Monday. So realistically, depending again on what type of trader you are, you could have taken this for a 5 pip break-even trade essentially, and you could have sold this as a continuation trade and you've gotten your 2 to 1. Okay, now going into Tuesday, same thing. Tuesday is here, so we're still coming off the reset. We're still looking for buys, right? Going into London session, pretty consolidated, and then now you start to see what's happening here, where price starts to attack below the Asian low. That should be like your first clue essentially of the manipulation happening. And so as we get into what's happening here, you can see that here we have the first leg. This is essentially a type 2. The first leg is here, and then we have a second leg here. Now, again, how big is the candle? So the blue candle here is 8.4 pips. The red candle is 7 pips. So that covers 75% of the blue candle. So this would be here a second leg star pattern. The red candle here essentially would be your entry candle. And so the entry could be anywhere, obviously in the pullback. It could have been here, could have been anywhere where you would have been on the pullback. And so now you're essentially doing, again, 2 to 1 on the trade scenario here. And your low could go below this blue candle or below the red candle. Obviously, it just depends on what risk profile you want to take. Obviously, the more risks that you take, the longer you have to go for a 2 to 1. So just keep that in mind. So that's the trade setup there for a type 2 pattern. Okay. So as we start to go into the London session, you can see obviously it wouldn't have mattered because you would have gotten way over 2 to 1 on this particular trade. Now, for those of you that like to try to stay in a trade as long as possible, and you're like, okay, well, how can I figure out how to trade or how to stay in a trade as long as possible? It's very simple. You just follow the 5 EMA. So the 5 EMA, the purpose of the 5 EMA is to allow us to try to stay in the trade as long as possible. So as long as price is not closing below, in this case, the 5 EMA, you could still stay in the trade essentially. So it allows you essentially to stay in the trade as long as possible, and then here would have been your exit from that trade. So you would have been looking at, over 3.5 to 1 risk to reward ratio instead of 2 to 1. But again, it just depends on what type of trader you are. If you're a trader that's trying to get the maximum value out of the trade, then you would just continue to follow the 5 and use that as your cutoff for your stop loss. If you're just a no nonsense strict type of trader that you just want your 2 to 1 and be done with the day, then you could do that and just take your stop loss, take profit, and then just take it at 2 to 1 and be done for the rest of the day, and you're good. So either way, this would have been your trade. Okay, now going into the US session, some of you might have looked at this as an opportunity for a possible reversal. Again, during the US session, you can trade reversals against a bias. It's perfectly fine. Now, the thing about this reversal, though, is the fact that if you're going back to the 50 EMA, I don't think you're going to have enough for a reversal, because you're not going to get a 2 to 1 to the 50, which you don't. You get a 1.5 to 1 risk to reward ratio on the 50. For me, it's just not something that I would take, because I would only want to take 2 to 1s to the 50. Now, as we move into Wednesday, again, we're in this area now on the 1 hour chart. Okay. Here's what I want you to start to notice, and here's where you can start to put things together. On Wednesday, if you're over already 3 times ADR from your closest peak formation or reset, okay, you're expecting a peak formation high to form, right? So when you get into this area up here, and you've already moved essentially over 3 times ADR in one direction, you have to be very careful, because we expect some type of retracement to happen, which would essentially create a peak formation high. All right, now what I want you guys to notice is if you start putting that together with the weekly cycle meaning the cycle that happens from Monday through Friday, okay, if you notice what starts to happen here, and I think the biggest clue was on Tuesday. You had basically a move that went in one direction, right? That essentially sets up Wednesday. If you notice what happens on Wednesday, right? What is above these highs here? What's above these highs? What's above this high here? Anytime that you have any kind of pullbacks, okay, so anytime that you have pullbacks here, above those pullbacks are going to be orders that are sitting from traders, from different types of traders that trade different strategies. Okay, the point that I'm trying to make here is if those are orders that are there, and you notice that on Tuesday you pretty much went up in one direction, and you're kind of setting up essentially for a potential weekly market maker cycle. Okay, essentially what happens Wednesday here, you can see price aggressively comes up and essentially just grabs literally all of the orders that are sitting up above here, above these highs, and above the highs from the previous day. So previous day's highs and Monday's highs essentially get taken out. Okay, now as far as Wednesday goes, again, if we're in this area here, we're still looking for buys, right? We're still looking for buy setups. Are there any buy setups on Wednesday? Well, the only buy setup that you would potentially have would be a type 3, but the problem for me is that you don't get any kind of a good entry at all throughout London session. So for me, there's nothing here to trade, especially when I start to see all of the EMAs going through price. I know that I'm expecting consolidation to happen. Okay, now even in the US session, again, there's nothing for me to trade there, but most importantly, what I get is a clue about what's potentially happening now for the rest of the week, because we have multiple things that are now starting to click into place, okay, that allows me to paint a picture of what potentially could happen for the rest of the week. So a couple things to consider is we're way over 3 times ADR on the current cycle. And then during the weekly cycle, we've now grabbed orders from yesterday's high and Monday's high. So if we start to see price wanting to go lower on Thursday, or basically giving us setups for sells on Thursday, then essentially that right there could be what we would need to help create the peak formation high that we see here on the 1 hour time frame. So when I told you guys earlier in previous videos that there are ways where you could trade against the bias if you wanted to, well, this is probably one of the best ways to trade against the bias, because you're trying to grab the actual peak formation high before you really get it confirmed, right? But you're basically using the weekly cycle to help you with that. Okay, so a couple things to note here on Thursday is the fact that during London session, you really kind of have a very messy London session. Price is just kind of going back and forth, but you get a lot of railroad tracks here, but you don't get anything to signal a really good, second leg. All these could be essentially first legs. You don't have more than 2 candles between first and second leg, which is not something that's ideal. You want the more legs that you have between the first and second leg, the better for your M or W patterns. So you don't have that kind of structure here during the London session. So to me, when I see this type of behavior, it's just very busy, and it's a huge turnoff for me because price is not very clear. And so if price is not very clear, then why would I want to take a trade on a pair where price to me is not very clear? Now, what I want you guys to notice is essentially this is just news at 8:30. Okay, so this is all just unemployment claims and GDP of news that comes out on Thursday. Okay, is this tradable? Not really, no, because news could do whatever it wants to do based on what comes out. So not tradable, but I think what's important is what happens and what it helps confirm. Okay, we've already picked up all of the orders that are sitting above Tuesday's high and Monday's high, and then now we have the news that now helps essentially push price lower. You'd have no trade on Thursday, and essentially you would move on to Friday. Now on Friday, you would already have the bias of sell, because now you would have gotten your peak formation, right? Your peak formation would have already happened. So now you're looking for sells as your bias. So what do you have on Friday? Well, again, it just depends on what time you'd be looking at it, because if you're looking at it from this perspective here, you would have had a type 3 here, and your entry would have been on this candle, close below the 13. The next candle, essentially, you get a slight pullback. There's your entry. And then depending on, if you want to put your stop loss here to carry lower risk, or, 12 pip stop loss, your 2-to-1 essentially trade looks like this. Now, obviously you can see what happens here. You go down, but then you end up essentially being taken out, if I'm not mistaken. So if you get in on this particular candle here, you're looking at 1, 2, 3, 4, 5, 6. 6 candles coming back up. You're not in substantial profit. and then essentially you just get out as a break-even trade. Okay, that's again if you follow the 6 candle rule. Now if you get into, let's say, the trade setup, if you come into the London session a little bit later and you get it on this as a railroad track, then the setup was basically more like this on a pullback. Your stop loss would go here, and then your 2 to 1, your trade setup would still look something similar to this. In this scenario, essentially the pullback candle is your entry candle. So again, you count 1, 2, 3, 4, 5, 6. At 6, you're right here. So you essentially get out on a loss of 4 pips. So if you come in early, you're getting out at essentially break even, no loss. If you come in a little bit later with the railroad track and the pullback, you get out at a 4 pip loss after 6 candles, because you're not in any kind of significant profit on that particular trade. Now in the US session, some people might see this here as a reversal. Well, I don't know if it's a reversal. I know somebody said they saw it more like a type 2 pattern, where you'd have like a first leg here and then this would be a second leg. To me, it wouldn't be a trade that I would take regardless. I just don't like how this looks, essentially, for me personally. If you were to take this, let's say, as a type 2 pattern, which again, if you were to see it that way, I mean, you're looking at the railroad track there, and then 2 to 1, the trade is looking more like this. Okay, but again, for me, not a trade that I would take. Okay, and then that would have been your week. So if you really think about it here, if you were trading this particular trade, you would have had basically one big trade that you got pretty decent risk to reward ratios on, and then the rest could have been either small losses or break-even trades. Okay, but now you can also use this as a reference point to use the weekly cycles that happen Monday through Friday and put that together with the regular cycle here that happens when you go from 0 to 3 times ADR in a cycle before you get a reversal. Okay, this is a full breakdown on pound USD. Hopefully this brought you some value. I hope you guys gained something from it, especially when it comes to putting together the weekly cycles and the regular ADR cycle on pound USD. If you need help with any of this stuff, with like peak formation resets, and you don't understand it, or you just want me to do it with you, FXM Plus, I actually do these for you every day, so you don't even have to worry about doing it. So that's what FXM Plus is there. But with that being said, guys, everything's links are in the description for the Discord and FXM Plus, and we'll see you in the next video.